How much gold exists in the world? It's about 189,000 tons. So US dollar 7.5 trillion worth of gold has been mined so far in the world. So that's about 2.6 Olympic swimming pools worth of gold. That's all that is above ground stocks, of which we will talk about how much India holds. Gold, what's about gold? See, gold trades more than many financial assets. So while it is used as jewelry, if you see globally, look at US euro, US dollar and yen. See where gold is pegged. $180 billion is the daily turnover of gold. That's why gold is so liquid, and that's why it is preferred as an investment even by central bankers. What's the market structure today? If you really look at it, we have a demand of jewelry which is 53%. This is a global scenario. We have investment demand which is about 26%. We have then technology, which is all the the car entertainment, the tooth, everything. All that accounts for about 8%, and 12% is central banks. If you look at the supply side, 70% comes from mining, and nearly 1/3, 30% comes from recycling. This is again very interesting globally. If you look at India, you'll see a very different picture. Neither do we mine nor do we recycle. That's what causes the problem. Whereas on this side, on the left side, we consume as much as the world does. Demand overall, again, I'm presenting first the global scenario. Demand has increased, particularly after 2008, the Lehman crisis, and we all have heard about it, what happened to the currencies and what happened to people's savings, etc. Gold demand just absolutely went through the roof. And you can see this, driven largely by ETF in US, India, and China. These are the three big drivers of demand, if you see that. Of course, things are changing a little bit, which is what I will talk to you today. And as I said, the sources are more diverse. I have already presented to you what this is. It is not only jewelry technology investment, you also have central banks and other institutions buying gold. Supply, if you look at the supply chart, by and large, it's remained, it has grown very, very insignificantly, let's put it, particularly mining. So what's happening in mining today is the cost of mining has gone up tremendously because the amount of gold you used to get earlier by digging the ground was now you have to go nearly 2 to 3 kilometers deep inside to get 1 ounce of gold. And earlier, there was one of our mining members who visited recently, said about 1 ton of earth, if you take out, you get hardly some 1 or 2 grams today. So that's the cost. So the cost of mining has actually touched closer to $1,000. So while we all see that the gold price itself has gone up, you also have to understand that the gold cost of mining has gone up significantly. And as you know, to set up a mine, to prospect, starting from prospecting till actual commercial production, it takes nearly 10 to 15 years. As of now, we see that the investments have dried up in that sector, so we don't believe that the supply is going to increase anytime soon. Why invest in gold? I think all of us know it is a safe haven. It diversifies portfolio. We have studied last 30 years data. Any portfolio, equity, debt, real estate, which has a little bit of gold, performs better over a longer period of time. People say gold doesn't give a return, but unfortunately, gold acts as a diversifier because when dollar goes up, dollar is strong, gold is down. When dollar is weak, gold is up. It's a good diversifier for dollar. That is why central banks continue to buy gold, because it is a diversifier for dollar. On top of it, we also find that it is inversely related to equities and many asset classes. That is the beauty of gold, and it is liquid, as I said. If you look at the market centers, again, as I said, the whole idea of this chart is to say that, look, earlier it was the West, COMEX, which drives the price. Right now, the whole thing is shifting to the East. India and China have, in the last 10 years, become the major buyers. So now they are making their attempts to call the price, international price. Today, international price is decided, of course, by LBMA price in London, But if you see what drives the price is the COMEX market in the West, where they don't buy much gold. They just trade in gold. What is driving the increase? As I said, political uncertainty, ZIRP, zero interest policy. As you know, in many countries, including Japan and even in the US, still very recently, when the interest rates were not rise, if you put money into a bank, you got to pay the bank in Japan because they did not want to take it. So the zero interest policy, negative interest rate policy, the QE, which we have all spoken about, now that's putting a lot of fiat currency in the market. Therefore, gold is seen as a safe haven now, whatever happens. Fears of inflation, regulatory liberalization, India and China opening up have also actually driven the investment demand. And new access channels. You will hear about it through digital now. So Western markets, as I told you, ETFs, which started about 15 years ago, now stand about 2,000 tons. 2,000 tons is held in the form of exchange traded funds. Exchange traded funds is an easier way of dealing in gold, because while a lot of Americans would like to hold coins, many of them would like to trade in the exchange. So this is a midway where somebody like HSBC holds the gold, they issue a security, and you buy and sell the security. That's it, and the gold is held in your name. It's fully backed by gold. And now that's become the biggest way by which people in institutions buy gold in Europe and US. So gold is starting to touch the mainstream investors. You have seen the China ETF market is growing now. Japanese pension funds are moving into gold now. 35 insurance companies in US have moved into gold again. So quite a lot of mainstream investors, including sovereign wealth funds, are moving into actual gold. India's stock of gold. We said 189,000 tons globally. Wherever. India has 24,000 tons. If you can see that, even our temples hold about 2,000 to 4,000 tons, actually, because we have this habit of putting it into the temples. I recently had a meeting with the Tirupati CFO. It was mind-boggling, the kind of economics and what we heard about it. It's a very different world out there. But overall, we still hold 24,000 tons, which is equivalent to $1 trillion today. And the total amount of deposits of households in the banking system is $1.3 trillion. So you can imagine how much of savings we have in the form of gold versus how much of savings we have actually put into the banking system. Till about 2 years ago, actually it was very similar. 1 trillion kind of stuff. Now, of course, banking deposits have grown, particularly after demonetization. It's $1.4 trillion. But this is still a significant wealth in the hands of households. It is the second largest market next to China. 50% of our demand comes from weddings. 60% comes from rural areas. Not very surprising, because 60% of our people live in the rural areas, 60% comes from rural thing, and there has been financial inclusion in the rural areas. We all know banking penetration has been pretty low till very recently, when they opened the under the Jan Dhan Yojana. But still, it is the financial asset of the woman in the rural areas. You can't take it away. So it still has a lot of relevance, and demand has grown by 14% in value in CAGR in the last 15 years. 14% in value every year. That's the amount of money we have put behind gold, and we don't produce a ton of gold here. So what are the key things? Now, because I know I was addressing this crowd, and I do believe in this, standards are very, very important. I had shown you one of the pillars is we need standards. We need standards for vaulting, we need standards for spot exchange, we need standards for hallmarking, gold quality. India does not have a good delivery standard. I know BIS is working on it. Today, if you really look at it, there is no India good delivery standard. We have an LBMA standard, which is controlled by LBMA. So how do you make gold an asset class? How do you make banks buy and sell gold? Do you know in India, Indian banks are not permitted to buy gold locally? It's very strange. Indian banks can't buy gold locally. They can only import, because we have trust more in the imported gold, LBMA bars. They can't buy gold from even the best refinery here. Now, these things are changing. I'm just giving you this thing that it's important for standards to raise our brand image of India. One of the reasons why our exports are not growing, if we have to send to the US market, we need better standards internally. Most of the large consuming countries have successfully mandated hallmarking. This is again from our report, which is available. You can see China, India. India is the one which is not, which still does not have mandatory hallmarking, and some of the smaller countries. Awareness of hallmarking, we were gratified to note 81% said that. This was about 10,000 people, 10,000 people. So 81% said we are aware of hallmarking, which was a great thing. Do you trust hallmarking? 73% said yes, 71% said yes in the second one. But what I'm interested in is 29% still say no. So this is again a very interesting thing. Finally, as I said, structural changes are on the anvil. Indian gold market is on the threshold of big changes. Standards and enforcement are key, which is where your team comes in to transform brand India in gold from a mere consuming nation to jeweler to the world. I mean, we have the ability to call ourselves the jeweler to the world. We have the best handcraftsmen. We have the best history. We need to do that. Banks have to play a greater role in making gold as an asset class. For this, they have to be absolutely sure of the integrity of gold traded anywhere in India. Till that time, RBI will never permit them to do it. Recycling needs a push. Again, here, recycling is you have to have standards.